Good afternoon. Welcome to the Town of Mount Desert Investment Committee meeting. I'm Phil Lichtenstein, the chair. Next to me is the finance director, May Weiler. Present in the room is Jamie Blaine. Welcome back, Michael Bailey, and Matt Weaver from the First. Absent today is our representative from the Board of Selectmen, Wendy Littlefield, and ex-official and on his way out the door, short timer, Derlin Lutt. And I have to emphasize the short timer because we're not going to short sell him ever. Because he did a really good job. It's incredible. He's been here as long. They used to run town managers out of town, Michael, in the old days here. Pack him up for you. Okay, let's let Matt Weaver do his thing.
Thanks, Phil. And Derlin, enjoy your retirement. And it was wonderful working with you over the years. So I want to start with some comments on the overall allocation, looking at these pie charts. Then we'll move on to performance, and then look at the portfolio composition for a few minutes, and then I'll take your comments or questions. The allocation as it stands right now is about 56% equity, very little cash. The reason for that is that there was a very large disbursement several days before the end of the fiscal year in late June. It was about $1.5 million. So we took that from the cash position. And then we have bonds at 44%. We're sort of in the middle in terms of the range that we have in the policy between stocks and bonds. We're at that 56%. We can go as high as 65%. That's a little misleading because we also have a hedge that's part of the equity position called the Calamos Market Neutral Fund, which adds about 3% or so to that number. So we're actually closer to 53%. The mix of equity in the middle there is a bias towards large cap U.S. stocks. Obviously, if you took all of the markets around the world and you looked at all the market caps, you'd see that large cap U.S. makes up about half of the world's market cap. So, that's why we have that allocation as it is. We also have a international large cap position, which has caught up a little bit to U.S. equities this year. Although, if you look at the overall PE of the markets, you have a forward PE in the U.S. markets at 22. You have a forward PE of the large cap international at 14. So we're going to be moving a little bit of the large cap U.S. position into international, and hopefully take advantage of some more catch up on the international side. We also have obviously mid cap, small cap, and that arbitrage fund is in there as well, in emerging markets. On the fixed income side, we have a mix of CDs, corporate bonds, some bond funds. Most of the positions, the individual fixed income positions, are throwing off north of 4% for income. We do have several that are below 3%, but they'll be coming off maturing in the next 6 months or so. So, that's why we like to have that flexibility. We know that the Fed is 94% that they're going to cut in September. So, we want to take advantage of rates now before they go down. So we'll be adding before the Fed cuts the expected 100 points by the end of the year. So that's sort of the breakdown on the allocation. On the performance side, I'm sorry, anyone have any questions or comments on the allocation part?
Yeah, I'm curious about the 53%, 47% stock bond. Is that why, if you can go to 65, why are you at 53?
We think that markets are, at least the markets in the U.S. are fairly valued, or you could even make the argument that they're overvalued. at 22 times. And when the VIX is this low, I get nervous. You know, and we've got a few things that are out here that we don't know yet in terms of where we're going to have that that tariff number. Is it going to be closer to 20% when we get done here, or is it going to be closer to 10? But you know, PPI was hot, and so I'm just not convinced that tariffs are not going to have some effect on our economy over the next 3 to 6 months. So that's why we're sort of in the middle of that allocation.
Have you traditionally been in the middle or higher?
Well, we've been lower actually. We've been lower than that. You know, when we've had periods of volatility. You know, in mid-June, when we bombed Iran and the Middle East was firing up, I'm just shocked at how the you know, how the markets have climbed this wall of worry that I mentioned in my newsletter. It's just remarkable. So that gives me pause that you know, we don't need to be, you know, fully invested, but we're close to that you know, long-term endowment allocation that, you know, we all know is typically 60-40. So I'm good where we are. I'm just going to make some moves in terms of rebalancing, take some funds out of the large cap U.S. positions and move them into international, and hopefully international is going to continue to catch up to U.S. markets.
I think we took a really good advantage, though, of the high interest rates with the cash that we had, using the money markets correctly. And I think I think that window is shutting very quickly, as we probably all know, especially as interest rates go the other way, or the cuts go the other way. And, you know, as always, a reminder of the group, we can't bet the farm. You know, we are not individual investors. We are a town with, you know, this is our rainy day fund, and this is also our capital reserves. And, you know, if the marina goes out to sea and we keep getting king tide storms, we need to be able to have access to these funds and say, oh, we had it and we don't. So I kudos to you, Matt, for being just smart on your feet and careful. And I believe the tariffs could go either way also.
Yeah, thank you, Phil. And you know, if we do have a significant pullback, I'll certainly, you know, move that allocation higher, you know, and take advantage of lower prices. But I don't think it's the time to do it.
Thank you. Is everyone comfortable with that in the group? Michael, Jamie again?
I'm just asking a question.
Yeah, but are we comfortable with his allocations? I mean, because you brought it up and now we're discussing it.
I'm listening. Yeah.
I think you're in the right.
I'm second guess him. I'm
Yeah.
listening to him.
You're not a micromanager anyhow. We know that.
No, I'm not.
May, the performance report is I think the next page 5. Sorry, the print is so small on that, but I'll
little laptop, it's harder to read the screen also.
Fiscal year to date, we're at about 5.5% against the benchmark of 6.02. I can explain that. You know, short-term variances in these numbers are easy to explain. Over longer term, it's not. So we have a very, I would say, short-term bond portfolio. We do have some intermediate bond exposure, and we'll be moving, you know, towards more of an intermediate as we try to, you know, lock in some of these, you know, 4 to 4.5% coupons that are out there that are going to go away. So we have an intermediate term bond benchmark that we've always used. We don't believe in changing benchmarks based upon our portfolio construction. So we could have moved a short-term bond benchmark in here and even things up in terms of the return, but it works both ways. So when rates are going up and you've got a short-term bond portfolio against an intermediate-term benchmark, you're going to look like a hero. And then the other ways, when it goes the other way, you might be underperforming a little bit. But if you go towards the right here and you see what we've done over 5 years, 7 years, and since inception, that variance goes away. And it should, because there's going to be periods where, you know, our sort of shorter term bond portfolio is going to look much better against that intermediate. But you know, 3-year annualized 8.58, 5-year 6.25, 7-year, they're all there beating the benchmark. So we're pleased with that. You know, the target for this fund long term should be, with this allocation, you know, ideally you want 5 plus 3, right? You want you know, 3% is long term inflation. You know, maybe if you looked at the rolling average over the last 5 years, I think it's closer to 5%. But that's what you really are looking for, is 8%, and you've got that on an annualized number over the last 3 years. So that, I think that's good for the town, and you know, we've done very well. Markets have cooperated here recently. So any questions about the performance that I can answer?
Yeah, Matt, I just wanted to, can you clarify again how exactly you calculate the benchmark? You know, Jamie had that question last meeting, and I think you touched on it, but I just want to make sure I have it correctly.
Yeah, so all the benchmarks here at the bottom of this page, you see the percentages. And so our vendor, our third-party vendor, that's looking at running these numbers, is using that benchmark below, and all the percentages are right there for each individual benchmark.
But how do you, what is your benchmark?
So it's made up of the S&P 500, the S&P 400 mid cap, the Russell 2000, the MSCI EFA, the MSCI emerging markets, the intermediate government credit, and then we have the FTSE, which is for the foreign bond allocation.
Oh, I see it's there. Yeah.
Yep. And you know, we've always used ETFs. We want those ETFs sort of to match up with its benchmark, which we've done. So, you know, ETFs, they not only provide that diversification that we love, but they're also market neutral, right? So we're not taking any bets, you know, on, you know, overweight tech or overweight healthcare, underweight financials. We're letting those ETFs give us that exposure to the markets that's market neutral, and I believe that's the way to go with institutional money.
A good question, May. Is that Jamie's? Yeah, but from last time, that helpful.
Okay. Yeah, and finally, yes. I wanted to look at the portfolio composition quickly and take any final questions you may have. So that's on the other report, May.
Yeah, get out. There's this.
Oh, sorry. Where is it? Sorry. Which page, Matt?
It's not in the presentation piece. It's a
Oh, the
separate PDF.
Yeah, okay. Hold that up. Will the quarterly statement work, or do you want the June 1 through June 1 or 31?
The June 30 is fine. Yeah, page 3, the equity piece. Here's the Calamos Market Neutral Fund, which I was referring to, the small hedge that we have in the portfolio. We have the money market rate. You were asking about the rate of return on the money market. It's on the far right column, 4.15. That's what it is currently. It resets on a monthly basis. I expect it to reset after the September Fed meeting. So we should be closer to, I would think, 3.5 at that point. Going down to the equities, as I noted, we have all these Vanguard ETFs. We have both the growth and the value S&P 500 ETFs in here, so that we have some mobility in terms of where we want to be. Is growth going to outperform value over the next 6 to 12 months, or is it going to be more of a value market? So that's why we have those two ETFs in there, so that we can make adjustments and strategic adjustments from time to time. I don't like to overweight too much on either value or growth, but we do have these separate ETFs. We have the Russell 2000 in here. Small caps have underperformed versus the large caps and mid caps this year, so we'll likely add a little bit to that position as well, and take advantage of hopefully as we move forward here, lower rates should help small cap. It helps their financing. The lower financing costs typically help those small cap companies. And we have the developed markets ETF in here, which I mentioned we'll probably be adding to that as well. So overall, we're pleased where we are in terms of our allocations. And on page 4, it's a long list here of individual bonds and CDs that we've purchased. As you can see over to the far right, the current yield, most of them are over 4%. So they were purchased, after rates moved up in 2022 and 23. So we took advantage of those higher rates. Some have come off over the last 5 or 6 months as they've matured. And as you can see, we just have a couple here that are, under that 2.5% threshold, but the Citigroup's coming due here in a couple of weeks. The Sallie Mae at the bottom of the page is 2.25. That's coming due here in about 6 months. So, that's why we keep that allocation to short-term bonds and CDs, but we will have some intermediate exposure. If you see on the next page, the Vanguard intermediate term bond, we have almost $750,000 in that fund. So we do have some intermediate exposure, and if I can find issues that I think are attractive between now and the end of September, I'll certainly be buying. And I do think that sweet spot right now in the fixed income markets is that 3 to 5 year time frame.
What's with the Texas Exchange Bank?
That is a CD. That's a CD, and my feeling about CDs is, if you keep your exposure under 250,000, the town is fully insured, FDIC. So that I tend to buy more CDs than I do corporates, because I just don't like that default risk in the portfolio. But I will buy them from time to time if I'm comfortable with owning the company's debt.
Good answer. It was 50 grand in dividends alone, too.
I'm
Nice.
sorry, Bill?
I'm going further down, and I see we've made almost 50 grand in just dividends alone.
Yeah. Yep. If you look at the current yield on all the fixed income, we're north of 4%, and that's where we are on the Fed funds rate right now, is in that ballpark. So I'm pleased, but I think we will need to lock in a few things. I'll look for non-callable if I can. Because if rates are coming down, whatever I buy in the next 3 to 6 months, if it has a call provision, it's probably going to get called. And I'd rather hold on to it for the 2 or 3 year term. That's all I have.
Last year's. 15. You did great.
Thanks, Phil.
Great. Thank you so much, Matt, for your presentation. That was great.
Well, and I just really, for a small town in Maine, thank you so much for, being mindful and, helping us keep the lights on for the future and, the social responsibility that comes with the people that sit in the room and are online today. It's really, we feel very lucky to have, being looked after, and most of all, trying to be safe. We can't bet the farm in our particular case. I know that I said that earlier, but I believe that.
Yeah, and I appreciate that, Phil. And I've been doing it for quite a while, and especially with the municipalities. And I can discuss this because it's public knowledge. But town of Bucksport, when we signed them up, 10 years ago, the mill was still running. They had plenty of reserves. Now they're using them, because things change and they don't have the tax base they had, and they had to use up the funds that they put away. So I feel I have a very big responsibility to make sure that those funds are managed responsibly, and we're prudent with them, because there may come a day when you need them.
Matt, if you take out the CIT, what's left in the portfolio? How much?
That's an internal, that'd be an internal question. I can answer.
Oh, okay.
Yeah, it's not for him.
Yeah, that's a sub-accounting, more of a sub-accounting for me, which I used to do years ago, but now I have some very competent young men that just graduated college are doing it for me. So
I think that's a really good thing for you both.
me too.
I mean, as a captain, you have to learn how to delegate. It's the only way to get any sleep offshore.
Well, these two are great, and they'll be in my seat before you know it. So they're learning the ropes. They're coming to some of these meetings with me, and learning how the town finances work, and we're usually just managing long-term surplus or reserve funds or those trust funds that get left to the town. So I enjoy it. I enjoy working with towns, and I've got about 10 years left before I'm headed to Florida. So hopefully we're still doing this 10 years from now.
Oh, I appreciate that, Matt.
Yeah, thank you, Matt.
I hope you and the family have a good weekend. I hope you get some time off before summer's over.
Yes. In fact, I'll be up there next weekend. I'm playing in the member guests with Tony at Kibo.
Oh,
Nice.
I guess I'll our tea time, I think, on Friday is 11 o'clock. So I'll what time do you think I should leave Damascata? Like 6 in the morning?
at least.
You could actually do it in 2.5 hours, but why be white knuckled?
Yeah, right.
They serve breakfast now at the club.
That's just a practice day, but I'm sure there's breakfast on the other days.
No, but the club itself serves breakfast on a daily basis.
Oh, they do?
Yeah, so
Yeah.
There you go. I hear it's good.
It is. Well, yeah, it's good. That pub is good. What day is that? Next week?
That's all week. It's an all weekend event, and
Weekend. Okay, so you
Yeah.
won't be here during the week, so we won't see you next week.
You'll be with Tony McKim, right? Nice.
Yeah. Yep.
Please tell him we say hi.
I will.
All right, we'll let you sign off. Thank you again.
Thank
All right,
you.
thanks. Take care.
You too.
All right.
Okay.
So now we can say anything we want. Those numbers were horrible, right? No, they were excellent, you know,
It
and
was a good quarter.
we got lucky. I think he told the story of like how delicate it must be to be sitting behind a desk with 7 computers, watching the world throb, and you know with the spitballs being thrown in Washington machine DC, and how to read that and how financial markets react. And I really appreciate when he spoke up about how everything happened about the bombing in Iran and how that all just changed, and you know they were ready for everything to go south and it didn't. I think that was terrific.
Absolutely. Okay. Would you like to review and approve the prior meetings minutes?
Yes, can I get a motion? I'll make a motion to approve the meeting of what were we?
418.
418.
Second.
Great.
All in favor? It's just so we can post them again. The Board of Selectmen read them, okay? Next item.
Next item.
Review I can't see it.
That's because we're on the minutes right now.
Yeah.
Now we're back to the agenda.
Okay.
All right, now we're having internal reporting time.
All right. May Weiler, Finance Director.
Okay. So for the last quarter ending, the end of our fiscal year was June 30th. This was the ending balances for our cash account, or the accumulation of all of our cash accounts right here. Again, these top two is our general fund operating account. This one right here is our reserve, ICS reserve that does sweeping for investment purposes with the I don't know how to describe that. With the sweep account. So the net of those two numbers is what's in the operating account at any given time. This was what was left in the school account. This is interest for the school account. Well, that's not interest. It's the allocation to the school's account. And then this was what was left in our First National money market account right here, this 507. I did that transfer for cash flow purposes in late June for $909,000. So that left $500,000 left in that account, which was to be in compliance with our investment policy of a $500,000 liquidity level. And then this is.
You took it right to you took it nice and close. I love that.
Yes. Yeah, and that's actually with interest. So I had it down to 500 exactly within the month accounted for that. So yeah. Then we had our capital projects. So these are the
CIPs and
no,
this is the capital.
These are bonded
right. So everything that Brian's got going.
Correct. These are the balances of our various capital projects and bond funding.
And what's the 5549? The highest one there, just as an example.
Let's see where you 554.
This one here. Am I in the right place? Cash and bank. No, I'm in
Oh yeah. So you have to look at the right hand side, the end balance.
Okay, sorry, I'm in the wrong place.
Right. So that would be the end balance of this particular account. 59 is. I'm not sure what project it is at the top.
It's okay. It'd be too hard.
That would be
you go by a number anyhow.
This 900,000.
Sorry, I don't expect you to remember everything.
Thank you. Appreciate that. I do know this 355,000 was for solar panels.
Right. So that was when we bought the panels for the highway garage.
For the highway garage.
So we own the array now at the highway garage, Mike. We did a power purchase agreement from revisions that we own that. We'll probably get the next 20 years out of it. So what an investment.
Correct.
Sounds like a great deal.
It was a great deal.
Yes. And so we still have a bit left in there. The 1.6 million, these last four ones were projects that are approved at the 2024 town meeting. And so this 1.6, that was for the sewer. And then 240. Again, I can get you.
No, we don't need
exact
exact.
figures,
This is a general. I want to keep things really light like this. We're not here to like tear apart your balance sheet.
Thank you. Okay, so Jamie, this is going back to the question you had about how much is in the CIP compared to the rest of the investment portfolio.
Great question.
Yes, it is. So right here, this after we did the fiscal year 24, or this actually should be 20.
That's correct, though. It's
No, yeah, we're good. But yep. This is the fiscal year 24 liability transfer to our operating account. So this is left in our CIP right here, this 9 million. And then this 1.179, that's specifically for the marina for their own fund. And then the remaining in the unallocated investments is 2.1, almost 2.
so if for Michael's information, the marina is done as an enterprise zone, so they have their own separate CIP that they pay, so
Separate budget, separate warrant
everything
article.
is separate
Everything's
because of the way, because it is
It's run as a business, not a governmental.
he gets it. Okay.
He got it. So, and then this balance right here, 12,434,970, that balances with, close your eyes so you don't get dizzy.
I get sick.
I know.
I'm not driving though.
So here we go, ending market value as of June 30th. But
Well done.
is this 12,434,970, then 12,434,970. So our books match the bank, which is great.
Well done. No, I was off $11 when I did my last, at the middle of the month.
That's not bad. I would love to be off by $11 sometimes.
It's like, I bet I could find the mistake, and I bet it was in math. So, because I usually use the calculator, but sometimes in the summer and I'm quick, and I don't.
Oh, usually use the calculator to be quicker.
Well, to be exact.
That too. Quick and exact is the goal. So then this one right here is the specific balances for each of the equipment reserves. So this is a breakdown of all of the what am I saying? Capital equipment. So
Right.
each.
So the minus number means,
So these ones, this is, it's a, what am I saying? This is a good thing in this case. So
I figured, but I.
so if we're, so this is a liability account.
Okay.
So the normal balance for a liability account is a credit. And so that's where this negative comes from. If this were positive in a liability account, that would not be good.
That means we owe, right?
yeah.
We're in the red.
So just keep in mind that in this particular scenario, the minus sign is appropriate and good. If it were negative in the asset section above, that would not be great, unless it's the net of those two accounts for cash operating account then.
See, you gotta love that the bait house at Seal Harbor still has $13,000 in it.
Let's see where you see the big house. Oh, yeah. Let's see. Yep. Bait house reserve. Okay. So any questions about that?
Now we're to the burrito,
this
that's only for transparency.
Right. And then to keep in mind, so this is just as of 6:30. There for 2020 fiscal year 2026, we have done the transfers for that this year's or 26's CIP additions. So we added another $1 million into the investments for broken down by the capital equipment reserves.
And do we have any major purchases that ended before 6:30?
No.
Excellent.
No,
Perfect.
we are still waiting on the purchase of that fire truck.
Yeah.
So that would be the biggest one we have, and that's encumbered. So that is not reflected in this balance, just so you know.
Good.
It's internal bookkeeping. And then fun part is our interest income for the full fiscal year. As you can see, we made it.
Good job.
We made it. So even with I wouldn't say the significant rate cuts that occurred this past fall in October, when we went from our ICS account from 5.25% to 3.927. That was a big cut, and we got it. We can tell that we took a big hit in this account. Last year, we were over budgeted expectations by I think $300,000, maybe $200,000 to $300,000. Now we just barely made it by 6,000. So that was a big hit. I reflected those cuts in fiscal year 26's interest income budget. So we're much more conservative for this year, unfortunately. And then these are earnings for the investment portfolio, just an interest income. And let's see, the 32 right here. 26,562. And then this is the interest that was made off of our capital project, so bond proceeds. And that's, like I said last time, it's in a separate account. So we're not making more money in interest income than we're paying in interest to the banks for these bond issues.
Right, and that's a question, if you remember, Jamie, that came up a few times in the warrant committee. Why are we bonding things? Well, we have the answer. Why don't we pay it outright? It's a common question we get from the community. Which smart business people understand it's worth to do the other.
And it extends the effect of the project over a longer period of time. So I guess the monetary effect of doing
Exactly.
the large projects, it spreads it over, and so the effect on an individual isn't as significant if we were to just pay it out of the operating budget in 1 year. That's why we bond.
But it's a common question at the warrant committee. Why are we bonding this? Well, now we have to explain it.
Because your taxes would go up significantly.
Right.
Literally.
Oh, no, you would go up instead of, 4,800, you'd go up $800 on your taxes immediately.
And especially with construction costs going up, I mean.
The price of a square foot of material, or, some of these capital projects, and what we're gonna end up doing at the school at some point.
Yeah, that started.
Yeah.
Mhm. Okay, so then here we are, we don't actually recognize interest income for the Marina Fund in this format.
We shouldn't.
Nope. And overall expectations or budget expectations for interest income, we exceeded them by 60,000. So not bad, even in a year of variability. And that's all I have for internal reporting. Any questions?
Do you have any concerns? And is anything that you want to bring to our attention? Now we've basically we're a little over a month. We're about to get all our tax payments in. Do you see any concerns, or do you have any questions that, as far as the direction? I mean, we could already take Matt Weaver in the first. I think we got pretty competent.
Mhm.
Any of your are you happy with your money markets accounts at Barber Bank and Trust? I think I should ask. And do you have any internal, concerns?
I think that it's probably time to consider going out to bid for a better interest rate on our cash accounts.
And we've had a history of that in this group.
Every few
Both
years.
Mike and Jamie, we always try, we don't want to rock the boat. I think Bar Harbor Bank and Trust would be willing to match, the going rate, but every 3 years we've been known to go out there and find out. So we should contact, Bangor Savings, Machias Savings, the first, we don't want to give them everything. I don't think you should ever have everything in one bank.
Correct. Right. So,
But we want them to we have a little bits that we do have cash invested with them within the fund, so it behooves them to look at it.
sure. And I think it'd be beneficial just to
Do
see
you
what
think
could be
you could
possible.
do you think you could send that out before the next time we meet? And without putting added pressure in your day-to-day work?
I'm gonna get back to you on that and see. I'm cleaning up the fiscal year right now, so I can. But
So like after September 15th, let's say it's a month out, so. I go by quarters in my head, so
right.
would it be better to do it at November 15th?
It would definitely the extend it would be
Okay, perfect. We don't want to be we want to be mindful. We don't want to be a burden.
No, I know, of course, not a burden at all. It's important that we're taking advantage of the best interest rates that we can, especially when we have the most amount of funds in the bank currently, because we've just gotten taxes in. So we want to take advantage of their big balance that we have.
So.
So I'll put that in
So
the
how
November
about,
meeting.
what's, instead of, let's go October 15th, we'll do it before Halloween, make it like candy.
For the meeting?
No, not for meeting, but for you to go start when are you gonna start asking for bids?
Once I get this bond taken care of,
So do you need 60 days?
yes.
Okay. And why don't we meet, let's see, so we've been in August. Traditionally, we only meet a couple times a year, but we could do it, we could
We meet quarterly.
quarterly, so November 5th, so the week before Thanksgiving. That's back to November 15th, that'll give you a chance to get your bond done and get some bids from some of the banks.
What interest rate are you? I can't get it.
That's a great question.
Right now,
Yeah.
we are at 3.927.
Oh.
And then at the first, we're at 3.66.
Which is still very good.
Double check.
Would it make sense to buy a CD for 6 month CD for some of that money?
That's something I can look into.
He certainly likes that.
Like the idea.
That was a Matt Weaver thing. You were paying attention. Matt Weaver likes CDs for that reason.
And I also think, I mean, we have to consider, just like Matt was talking about, how there are cuts coming in September.
Yeah.
So I don't know, maybe if it is a good time to go out, especially if there's going to be significant cuts.
Well, we want to get it before they, if it's gonna go 100 basis points, that's a full percent, so.
Correct.
It'd be good to start earlier than later.
Right.
That's where I was going. So why don't you, after your bond comes out, you start getting some numbers
Okay.
and we'll try to, I don't think you're gonna see more than 25 basis points before Christmas. I don't think I think there are people that like to see a huge one, and I think that it's gonna be baby steps because of the tariffs.
Okay, so we already got to scheduling the next investment committee meeting. So let's look at our calendars. So the week before Thanksgiving would be November 21st. That would be the Friday.
When we traditionally meet on Fridays, Michael, is that a good day of the week for you all? The
Yeah, that works
23rd.
just fine.
Oh, God.
Oh my gosh,
When the police come in, this is everybody, right?
I'm not getting it.
Huh?
North Wyndham.
What is it?
When the police come in at large and window
Oh,
shelter
no.
and.
Shelter.
Yeah, we're not even anywhere near, but that's what happened.
No.
Good to know.
Did you get that, Michael?
Where's Wyndham?
You got?
Oh, I did.
Didn't get notified.
Okay.
No, it's not.
It's like, Wyndham's like, sort of north and, east of Augusta.
No way.
So weird.
Yeah, so November 21 would be the Friday before Thanksgiving.
Yes.
And that gives you the 60 days you need to finish your bond, and I
Oh,
don't,
yeah.
I don't think we'll lose more than 25 basis points in, any interest type things, and.
Yeah, so
and-
I don't need to say the bond's coming up shortly. So once I get that taken care of, that'll be in September, then I can start issuing or looking into issuing bins. And then at the 15th is when we would decide on which institution to go with. But again, so you're still comfortable though, even with the uncertainty going out, doing this and going out for bid.
I think we have to,
Okay,
because it only could get worse.
yeah, yeah.
Right, so let's say if you have your financial planner telling you, they're already expecting 100 basis points,
Yeah.
that would be a full
percent
percent
Mhm.
off of, so
No,
we're
we're-
3.94, that brings us to 294, so if we only lost, a quarter of 50 basis points, as they would say, 0.5%, we did well.
And it's time that we do it, so.
Well, it's just, it's the right thing to do.
This is my calendar. At 3:30, like usual.
Be dark.
Be done. It would definitely be
Do you
done.
want to do it?
No, it's fine. We're teasing. It's like,
It is
November's the worst month
It
here.
really is tough.
I used to move yachts during November and April, and my wife was always so mad. Why are you gone for the worst 2 months of the year? thought I had a really good gig. Why are you still in Bermuda? Well, I just don't want headwinds. It's cold in Bermuda in November.
Sounds like
They,
you were
they always
swimming.
look at me, why are you swimming? Are you from Canada? I usually say close by.
That's funny.
The natives will never swim. This is summer down there.
Oh, yeah. Okay, November
All right.
21st, 2025, 3:30. Other business, questions, comments, concerns?
Yeah, I think we want to send a message to the Board of Selectmen from the committee, and we want to thank Derlin Lund for his service and for, with the investment committee, and we wish him well in his retirement. If you could think of anything kinder to add, you're allowed to.
Thank you, Derlin. It's been a pleasure working with you. He's not gonna watch this.
I will add one more thing. Michael, we'd like to find one more really good member in the community. If you ever think of somebody that would be good, I always think, would that person be good? I've yet to find that person yet. That would be, that we're really blessed where we had the CFO from Friends of Acadia. He was just fabulous, and he's left. He was really, really good. We had John Brown, also very, very good. He moved to Bar Harbor, and so we want to always keep an eye out to add one more person to this committee. Again, that would only be an asset. It's supposed to be funny when we're dealing with investment. We want an asset.
That's funny.
We want to keep the balance sheet balanced. With that, thank you all for spending time with us. Anything else for the group?
Thank you.
Thank you coming in on a hot summer day. And anything else? Thank you, May Weiler.
Of course, my pleasure.
Well, we'll sign off. All
Good to
right,
see you.
Michael, good luck with everything. Thank you.
Where's Michael?
Thank you.
There.
It's over there. So Megan,
Take care.
please. Thank you.
Bye.
And the meeting for all, we did it.